earnings season has been better than expected, but it is far from over. And so I would expect that when we finish, it will be better than expected because expectations have been diminished. All in all, it will be somewhat mixed. And so we have to be prepared for some disappointments coming.
So, Jack, if I'm sitting at home and I've seen this tremendous rally up 17% for the year, but have been too nervous about what happened at the end of last year to get into the market, is now too late?
I don't think now is too late, but I do think, as Kristina just pointed out, and you just mentioned, we've come a long way and we've come there quickly. I do think that we're going to get a chance to basically see markets maybe moving a little bit more sideways in the shorter term, but I do think that we have gains still to come over the course of the year as investors start thinking about 2020 earnings over the course of the next 2-3 months. That lens is going to shift from what we're seeing now to what we're going to get next year.
Jack, where are cash levels at JP Morgan Private Bank at the moment?
Cash levels are low, at least in terms of the portfolios that I pay the most attention to on a daily basis. And we find that timing is hard because timing is really a two-part decision. It's when do you sell, when do you reinvest? And we'd rather think about taking that longer-term perspective and trying to compound within markets overall.
Kristina, you sounded a little bit nervous. Is there something that worries you on the corporate front when it comes to the earnings?
Well, I would say I'm not nervous, but I will tell you that I do believe that investors seem to have gotten a bit too excited about this earnings season. Now, of course, earnings are being looked at through a rose-colored lens, just given the Fed's abrupt change in monetary policy stance. And I think that has something to do with it. But I just believe that there seems to be a bit of animal spirits in markets right now, and we're probably going to be in for a period of digestion just because stocks have gone up so much.
Rick, so the dollar's above 98 today. Some various big moves from the Canadian dollar, Aussie dollar, euro, yen. What's moving all of those things?
It seems so counterintuitive. You have interest rates going down. You have stocks going up, at least for the most part. They're at lofty levels. And you have the dollar zooming. Where it sits now, Wilf, would be the best close since the 15th of May, 2017. Consider some of those pieces. We talked many times, in order to get the dollar index to really push through 97, you had to have the euro currency under 112. It is way under 112. I would put it this way, Wilf, keep it simple. You have to be buying treasuries to push the yields down. You have to be buying stocks to enjoy all-time highs. And what are you buying both of those with? The dollar. And why would you be doing that? Well, maybe you opened up a newspaper in Europe, Japan, or China lately, and I know we can make an argument China may be doing a little better. They got an injection of the drug again. Maybe they'll do better. Maybe trade will fix it. I do believe it will. But in the final analysis, it's very difficult to get too excited about investments outside the U.S. There's even questions about the sustainability of investments in the U.S. But while it continues and momentum is in favor of the upside, I think the dollar and stocks are going to side together, and I do think the demand side of interest rates will hold up a bit, push yields a little bit lower. But in the end, I think 230s, low 240s will be about it. We'll have to wait and see.